Okay. Hopefully this should do it. All right. I've got the little recording button and it's full. No, there we go. It's on. Well, that will be an interesting video recap for everybody. On, off, on, off. Okay, so before we get started, I just wanted to draw your attention. Nola brought it to my attention yesterday morning, and Johnny weighed in this morning on it as well. I apologize. In the worksheet yesterday, if you downloaded it after 9:15 a.m. Saskatchewan time yesterday, you've got an old version that had an error in cell F74. So what it was doing in cell F74, it was actually summing up all your spending wants. So if you were shocked at your end number and you felt that you were way over budget, it's because your cell F74 is might be incorrect. If you downloaded the template after 9:15 a.m., you've got a working one. It was just that one cell where it was summing up the total. So if you could take a look at that now, if you have it open, and just make sure that that number that you currently have in there is actually reflective of that line item expense on line 74 and not disproportionate. All right, just wanted to bring your attention to that so you have it. Does anybody want to share anything or chat send me a chat? Actually, if you don't mind, can you please send me a message and let me know if you were using an old version or a new version so I can follow up with you independently and just make sure that you've got the right number there. Okay, other than that, let's move in here to our day 3. We've got an exciting day today. Yesterday, the intention was to put all of those numbers into the spreadsheet so that we were going to take a look at exactly at the end of the month where you're currently sitting, because I suspect for many of you, we need to make some adjustments so that we've got a balanced budget at the end of the month. So we're going to put that on the back burner for the next 2 days, because the work that we're going to do today and tomorrow is going to help us better understand what we need to be putting aside from an investment perspective and what we need to be putting aside so that we can get our debt repaid. So that's what we're going to take a look at over the course of the next 2 days. Today specifically, you have two, I guess I've kind of cheated because I'm saying it's exercise 1.3, but there's actually 2 exercises today. There's step 1 and step 2. So hopefully the lifting isn't too heavy, but let me give you a recap of what we're going to do today. So today what we're focusing on is, well, today and tomorrow, we're actually focusing on net worth. A lot of people will go to, kind of understanding their budgets or their earning potential, and I guess their earnings overall to kind of figure out where they're sitting. This is interesting because Nola and I were just talking about this. You see a person driving down the road, they've got this really expensive car, and we tend to make a lot of assumptions as to their wealth. What truly defines your wealth is actually your net worth. And so how we define that net worth is creating a list of assets minus your liabilities, and that's going to tell you what your true worth is right now. Now, this isn't the whole behavioral piece, because I want you to know that our goal in working together is to start shifting that worth, because your current worth is just a reflection of the decisions that you've made up until this point, and we can change them all very quickly. But the only way that we're going to get to our final destination is by understanding what our starting point is, which is why we're doing all of this work this week. So let's take a look at what you need to do. So the first thing that you will need to do, if you haven't listed these things out already, you've got a scratch pad here for you to start writing out a list of all of your assets. That's where I would start. Now, assets are typically, from accounting perspectives, and if we're doing this for business, it's anything that's holding its value of $500 by the end of the year. I don't know, I guess you could start thinking about furniture and all of those sorts of things, but I want you to start thinking, kind of realistically, if you had to resell this at the time that you're ready to resell it, would there be any value in it? So definitely right away, we go to our homes, our recreational homes, our vehicles, our recreational vehicles. That's usually what we start thinking about right away. And then we go to any sort of existing investments we have. So the value of your RRSPs, your tax-free savings accounts, anything in your RESPs, anything that you have in your savings or cash on hand. Also remember cash on hand if you have it in the house. So one of the things that I usually encourage people to do, which we'll talk about after, is that with your emergency fund, we actually want to take a portion of that cash and have it in the home, because if something happens externally and power goes out and banks don't open and ATM machines aren't opening, having money in a savings account is going to do nothing for you. You're not going to be able to access it. So you want to make sure that you have some of that cash available to you in your house. We would put that here in the list of assets. The other piece when you're creating your list, this was an eye-opener for me, because with my ex-husband, he had, and I always gave him a lot of grief for this, but his hobbies and passions were cycling and playing guitar and music. And he would spend thousands of dollars on guitars and tens of thousands on bikes. And I'd be like, what are you doing? My spending habits typically were on home decor, shoes and clothing. That's where I went. And when we actually started to build our list of net worth, his, what I thought were frivolous expenditures that were very expensive, all of his expenditures actually held their value, right? The $15,000 bike actually went up in value because it became a collector's item. So it actually went up to $21,000. His guitars all held their value, right? So it's important when we start thinking about what it is that we're buying, you know, is this something that's going to hold its value? Is it going to depreciate, or is it going to appreciate? So when we look at assets, again, the houses, the cars, the recreational pieces, everything that's in our tax-free savings, RESPs, but I also want you to think about any collections that you may have. So after that big eye-opener for me, I actually, personally, one of my passions now is art and investing in art. So understanding the artist, understanding their history. So I would be listing that under my list of assets as well. Some other things, jewelry, antiques, any other collectibles that you may have that you think that you could put on the market that would have a value. All right, so that is step one. Well, that's part of step one, is actually just listing everything. Now, where some of the heavy lifting here for you is going to come in is finding today's current value. Now, what we might need to do is you might need to ballpark the current value, and you might need to then add to your action plan at the end of the week that you're going to have to start going through each one of these line items to get the right appraisal. So for example, with our home, you might be turning to your annual appraisal that the city does for tax reasons, right? So that they know how much to tax you. The city usually puts an appraisal on your property. I'm also going to post, there's also the Appraisal Institute of Canada, where you can find appraisers. Having someone to come into your home to appraise it is an expensive proposition. It could run you anywhere from $300 to $700, depending on your property. So I'm not recommending that, but I'm recommending that you get some base points here. With respect to your cars and vehicles, there's the Kelly's, Canadian Kelly's Blue Book value, if you're looking to find today's current value on those assets. So that's the other piece. We need to list it, but then we need to list current value. And that's important, obviously, because the value in your home, we know that that goes up regularly year after year after year. So we want to make sure that we're accounting for that. So all I need you to do today is start listing those assets specifically. Leave the equity portion out for now. I think that's a little redundant at this point, because when we look tomorrow at liabilities, we'll subtract the liability from the current value, and that's going to get you your equity portion, or at least how the banks would do it. Okay, I am thinking that that is the big piece on assets that I want to talk about. Are there any questions on pulling together a list of your assets and finding the value for them? Any questions? Feel free to throw me a chat. I can pull it up and we can talk about it. All right. So step 2 of today is, I'm just trying to scroll here without moving everything. I realize that in our recordings, when I start moving our beautiful faces around, it shows on the recording. Anyway, so the things you learn. Okay. So this one is interesting. Our step 2 today is actually to determine our magic number. And the magic number is, what is the number that we need to actually have set aside so that we can retire with financial health, right? So our retirement number. It's interesting because there's a stat. Now I posted this too to the locker room. It's a very interesting article. A survey earlier this year, it was the Financial Post that put this out. And the magic number that most Canadians came up with was around $756,000 is what they would need to actually retire securely. And of that number, 90% didn't even have a plan to get them to $756,000. So if you don't have a retirement plan right now in place, or you're not investing for your retirement, don't worry, because you're not alone. 90% are not doing that. The reason why we're doing it is because we do want to have a plan in place. We want to start budgeting on a monthly basis so that you can get money into your investment account so that money can start making money for you. So at the time that you choose to retire, you're safe, you're taken care of, you do not need to worry. So there's a couple things that we're going to have to do to figure out that number. I'm trying to make this as simple as possible. So again, I am not a financial advisor, but I want you to have a rough idea of what that number is. And then, and I'm not going to look for a show of hands here. Some of you might already have financial advisors. Some of you may not. I've posted some tools and resources, and I'm going to walk through what those are today. So here you can see in your manual, I've given you a formula that will walk you through how you roughly, and again, this is very rough numbers, but how you roughly come up with that number. And basically, you're going to just be establishing what your anticipated retirement age is, what your current age is, which is giving you how many years you actually have to be able to start collecting money and getting that money to make money for you. And then you're also then in step B, you're going to determine how many years you plan to live in retirement. So if our expected retirement age is 65 and you're expecting to live to 85, you're going to have to tell us what that number is, how long you expect to live. But if you're expecting that you've got 20 years now to take care of, right, financially, we're going to take that 20 years times 12 months, which is going to show us we have to account for 240 months of a budget to make sure that we're taken care of. So then step C, you're going to put in your anticipated monthly expenses. Now, this is going to be very unique to each of you. Maybe in the next, whatever that is for you, 20, 30 years, your mortgage will be paid. So you won't have a rent to pay for. Maybe for some of you, you will have to account for rent. You may be accounting for health expenses, right? Travel expenses, fuel, extra insurance. So whatever those expenses are, make sure that you're accounting for them. You may want to turn back to the monthly budget that you have now and take a look at, okay, well, here's what we spend now. We're probably going to take off maybe the rent and mortgage, maybe maybe your insurance deductibles will be lower. Maybe you won't have 2 vehicles. Maybe you'll have 1. So you're going to get a rough idea of what those expenses are. So once you have those expenses, then we are going to subtract from that any anticipated income that you see yourself receiving. So you might be getting CPP. Now, just a little note on CPP. If you've been an entrepreneur for the majority of your life and you have not been claiming source deductions, you have not been contributing to CPP, right? So that number is off the table for us. If you have had employment in the past, or you have listed yourself as an employee of the business and you have been receiving or you have been deducting CPP, then that is going to kick in. And I'll show you another little calculator there in the locker room that I've put in there. So here we're just going to take off any anticipated income. So whether it's CPP, whether it might be any sort of options or pensions that you've accumulated, maybe it's some sort of monthly stipend or dividend that the business is paying you because you expect to sell the business in 20 years, but still to receive some sort of profit. Whatever that looks like, we deduct that from the need. So then basically it's saying all of your expenses minus your anticipated income is going to equal X. And in this case, we are saying here that 3,500 minus anticipated income of 1,500 leaves us with a balance of $2,000. 2,000 times 240 months means that that nest egg needs to be $480,000. So again, most Canadians are thinking their nest egg is actually 756,000. My nest egg personally is 1.2. I did not get started early enough. I had nothing. I have not been contributing to CPP. So I know that now I have to really, in the next 15 years, I need to find a way to get to 1.2. So that's my number. Again, like yesterday, I do not want you to start worrying about the number. The number is insignificant. You can create whatever it is that you want. The reason why we're doing this is so that you have intention and clarity around what you do need to create. Right? So most Canadians have no idea what this number is. You're going to be like the 5% of people who actually know exactly what their number is, which is brilliant because we can do that. We can achieve that. So that is what your assignment is today. I think I've probably put too much here in the workbook. I could probably clean this up. I apologize. So then the next piece here is actually just converting all of those numbers into our A's, B's, C's, so you can get a better understanding of what we're subtracting and adding. And then down here in the black, you can start to put your numbers in and come up with your totals. So hopefully that makes sense for everybody. So the objective today is A, to list all of your assets, to put the current value of all of your assets, and then B, to figure out what your magic retirement number is going to be. Hopefully that makes sense. Any questions on that? No? Okay. So let's see. I just want to show you. I'm not sure if this is going to take a while, and it might because I'm on Zoom, so my internet gets slow when I'm on Zoom. But what I did post in the locker room for you is a couple of things. I posted one, the article that talks about Canadians and our pension plan is 756, our idea that our pension needs to be 756, and 90% don't have a plan, because I find that to be a very interesting article. The other thing I posted for you is from CRA. It's actually a government link that you can go into, and you put in your data, and it will actually tell you what you can anticipate receiving for CPP at the time of retirement based on your contributions. So this is personal to you. You put in your personal information, and the government will tell you what they have for you in terms of anticipated CPP payments at the time that you're eligible to receive it. Does that make sense? And then the third piece that's in your locker room is there is a post that is called, I think it's Magic Number Calculators. So in there, I have posted 3 calculators that I have found to actually be quite valuable. The simplest way to do it is still just the formula that I gave you in your workbook. However, if you want to get down into nitty-gritty and details as well, these calculators online account for inflation. We're not accounting for inflation, right? So inflation in Canada, inflation goes up approximately anywhere from 2 to 3% per year, meaning that our the cost of living is going up 2 to 3%. So in 15 years, what is costing us, $100,000 is going to be costing us 3 times 15. You can see how the math starts to, it's exponential growth as you go up. So these calculators will actually start accounting for that for you, depending on how detailed you want to get in to the numbers themselves. So the 3 calculators, I believe there's one from Edward Jones, there is one from Sun Life, and there is another one from our Canadian government that you can go in and it can start calculating all the math. what we can do with today's exercise or a follow-up action plan is that once we get this number, what I would encourage all of you to do is to seek financial investment advice. That is not me. I am not a licensed financial advisor, but there are some great individuals out there that if your number is 1.2 million, it doesn't mean that you need to set aside 1.2 million. There's a sweet spot that if I can get, 500 to 750,000 in there over the next 15 years, that money should be making enough for me to get my 1.2. Financial advisors will give you all of that math and will let you know what investment vehicles will actually get you to those magic numbers. Does that make sense for everybody? Hopefully, yes. One other piece on financial advisors, a great place to start, to even just start collecting information, is your bank. Every bank has financial advisors or account reps there that can walk you through some of the options available to you. I don't encourage you to jump in on all of the options. I encourage you to get as much information as you can and then weigh your decisions. So that's the other piece. And the third piece I want to tell you about advisors is understanding fees attached to financial advisors. So anytime you're making an investment of your money, there's not only the interest rate that you're going to receive on that money, but we have to deduct the fees, right? So we have to, usually financial advisors, some of them might charge an upfront fee, some of them might be commission-based, some of them might charge a fee to close down the account, some of them might charge a monthly management fee on your account. So there's lots of fees that are included there. Some financial advisors are moving simply to like a service-based fee. So it's just a set amount per month, and it's not commission-based and it's not attached to specific transactions. It's just that they want to provide a service to you. It's a flat fee. And many people are actually starting to look at that as one of the most viable options there. But let's not get too overwhelmed right now about where you're going to find these investment opportunities. Let's just figure out the number, because most people are throwing money at investments and not even realizing what it is that they need to create. So we're going to get very strategic today. We're going to figure all of that out. That is the plan. So here we go. Here's the locker room that I told you about. And here, calculating your magic number for retirement. That's one of the posts where you're going to get those 3 calculators. Canadian Pension Plan, that's the other one where the calculator is in there from our Government of Canada, CRA, where you can put in all of your data and they're going to tell you approximately how much you can receive on a monthly basis. And this is the article from the Financial Post that just some really interesting high-level numbers on what Canadians are thinking and doing with respect to retirement. So today is all about understanding our assets and where we need to get our net worth to. Tomorrow we're going to look at liabilities. Let me open it up for questions. How's everyone feeling about this one? Oh, there's some chats. I love it. Is money owed by my company back to me considered an asset? Great question. And anybody can feel free to chime in here. It is my experience that money owed back to you is not an asset. And actually, you bring up a really good point, Johnny. I put this down on my list of things to talk about, and I forgot to do that. So it is not considered an asset because it's owed to you, because the likelihood that you can collect on that from an asset perspective isn't great, right? So even if other people owe you money, so let's say that you've lent out $100,000, it is not considered an asset because it's still a debt that isn't paid. So you can't bank on that. But what I do encourage you to do, and you'll see later on, I'm going to encourage you to put together a financial money binder where everything is stored. I would encourage you to write out a list of all of the debts outstanding to you, who owes you money, including your business. Because in those, if something were to happen to you, or it's also a checklist for you, you should be making sure that one of your priorities is to be able to collect that money, because then once you collect it, it is considered an asset to you. It is considered, it's of value to you because now you have that asset in hand. But right now you don't have that asset in hand. That's money owed to you. But again, I would recommend that you write that down on a list and include it with your net worth. So again, in the event that something happens to you, or that you can make it a priority, get that money, collect that money, because you can get that money making money for you, right? Right now it's sitting in the business and it's owed to you, but it's certainly not making 7 to 8% every year, unless your net profit is 7 to 8% every year in your business. Then that is making money for you, which is great. So great question. Is there a worksheet in the locker room for this? There is not, Cindy. What I did is, again, I just added it here in the manual for you to input those numbers. But you're right. That's actually a really good point. I can probably quickly create one, maybe today, but don't hold me to it. I want to exceed expectations, not let you down. But I probably could put together a quick Excel document to be able to do that for you. Right now, you have to do it old school analog version in the workbook. Put your pen to paper. So thanks, Cindy. Good suggestion there. Okay, any other questions? So again, do not be afraid of the number. This is definitely doable. I was telling Nola ahead of time that, I have a client that we went through this exact same process. We were actually doing planning for profit in her business. We had to go to the personal numbers to know what she needed to pay herself from the business. So I think she was on average taking anywhere from maybe $2,000 to $4,000 a month from the business. Her husband was taking care of most of the bills. We put together the plan when they actually realized what they needed to be stepping up on, primarily investments and primarily savings. She needed to generate, I think it was $12,500 and some dollars from the business every month. So for her, she was like, what the heck? I've never done this before. One of the first things she started doing in the business is that she started paying herself first. As a true martyr, she never paid herself first. The employees came first. It was very uncomfortable for her, but she started paying herself first. So all of that worked. There was small incremental growth. Of course, we did this exact same process for her business. And I was telling Nola that just last night at 8:30, she was so excited because her investment number and what she needed to be able to pull from the business, it was a number that scared her and created some anxiety for her. But step by step, we started to understand what she needed to do. And so yesterday I get this text from her, and she reached out. She made one call, but it was to a national association. And her revenues are going from about 750 to about 1.3 million. And she will now be paying herself $15,000. That was in 3 months. 3 months. So it's amazing what happens when you get clarity and you start understanding what you need to be doing, because everything else can come. It's actually, it's pretty amazing to watch it all unfold. Okay, so don't be afraid of your number. Embrace it, love it. We're going to make it happen. If you have any other questions for me, you know the drill. Please feel free to text me. A lot of you are emailing me. That's great. I would actually love to hear from you. I don't want to inundate you with emails every day. I've been posting lots in the locker room. I'm not used to not having a one-on-one connection with my clients. And so I would love to email you, but I also don't want to spam you. And I know that your time is precious. But if you want to hear from me, let me know. Otherwise, I'm just going to keep posting things into the locker room. But you know how to get a hold of me. So I'm going to leave that to you for now. But feel free to fire me off a text if you want me to send you some email motivation every day to keep going. All right, 8:30, I'm going to leave it there. Thank you. I'm excited for you today. This is going to be a game changer. Enjoy the momentum of this. I'm not going to talk about tomorrow. Let's just celebrate today and looking at assets. That's a good one. Let's leave it there. Okay, we'll see you tomorrow morning. Reach out if you need me.
Okay, thank you. I'm not here tomorrow.
You won't be here tomorrow, Nola?
No.
Okay, all right.
I've got to leave the house at 9 tomorrow morning. So.
Okay. Well, if anybody wants to dial in at 1:45 and take Nola's place, we have some great chats for 15 minutes before everybody signs on. So I'll be here. All right, thanks for letting me know, Nola.
All right, thank you.
Okay. Bye, everyone.
Bye, Tanya.
Bye, Dana.